Hi everyone, my name's PK, and here I have Kevin, who's a client of the Property Investment Accelerator. Kevin's based in Sydney. He's actually a mortgage broker. He's been a mortgage broker, I think, for like more than 6 or 7 years. So he's quite experienced. Recently, just bought like hot off the press in Melbourne. He bought one recently as well in Queensland. We're going to talk about how he's experienced the use of buyer's agents and how it's not all what it's cracked up to be in terms of his first investment property. And then we'll also talk about his other investment properties that have much better potential because he's followed the data, he's become educated. I want to say as well, Kevin's like a really legit sort of person, and that's why I really am going to enjoy doing this episode with him because even before hitting the record button, Kevin said to me that I want to make sure that people know that it's property investing is not all fun and games, that it's not always easy, and that getting to 10 properties is not a walk in the park, and that we have to seek enjoyment or happiness in the process and in the small things as opposed to just these lofty goals of 100K passive income. Welcome to the Oz Property Investment Mastery Podcast. My name's PK, and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you. So you can see Kevin's very all-rounded. We'll talk about his journey. And also I want to say that Kevin is actually very good at Taekwondo. And that's kind of really interesting to me because my son does jiu-jitsu. And I always thought Taekwondo was a bit boring because it was a lot to do with kicks. But that's probably very offensive, Kevin. So I apologize in advance. But anyway, congratulations on your portfolio and welcome to the episode.
Appreciate it. Well, appreciate the warm introduction. You've summarized everything quite nicely. Yeah, I'll have to verse your son sometime in jujitsu. I've actually done some jujitsu myself, so yeah, I'm still a white belt, but I can maybe show him a few moves. And if your son's still young, I might have the weight advantage. So let's see how that goes.
Yeah, he's 6, so I think you probably got, a leg up on him, but maybe give him, like, another 10 years maybe, I don't know.
Wow, 6 and doing jujitsu. He's gonna be a force to be reckoned with.
Yeah, I like, everyone was for the longest time telling me that jujitsu is the best martial arts modality to gain confidence and actual, like, combat experience. He used to do karate, but he got super bored with it because it's just, like, kicks against I don't know, a bag and punches. So we also looked into taekwondo, but he thought, he wants grappling and all that sort of thing. So jujitsu was what we put him in.
Yeah, no, that's an awesome choice. Honestly, if I weren't doing taekwondo, I would probably be doing jujitsu. There's just something so physically, like being able to wrestle with someone and show your dominance, but also balance out that I don't want to hurt them. We're just having fun here. There's just something real about that I just love um, about
Yeah.
jujitsu. So yeah,
No, 100%. And I think it promotes problem solving, like throughout the actual session because you're constantly having to figure out how to get out of holds, how to get the other person on the defensive. I'm sure it's the same in Taekwondo. But anyway, before we lose our entire audience by talking about this for the next 20 minutes, I just wanna maybe we'll start from the start, right? Like, how did you I mean, I know to an extent how you got into mortgage broking is because of your family, they introduced you and they gave you a head start, but what made you get into property investing? Like, what was the light bulb moment, or what was the genesis of that?
yeah, great question. I guess I've always been when I first started mortgage broking. I got to see people's journeys. Helping people build their portfolios, and a lot of my colleagues are property investors, including my uncle, who got me into mortgage broking in the first place. And I could really see the potential where clients would purchase these properties for 400 or 500K, and then 1 or 2 or 3 years later down the track, they're able to pull equity, go again. And so this power of leverage, being able to put 10, 20% down and control a large asset base. It was like eye opening for me. I was thinking, why don't more people do this? This is amazing. So I was really keen to get started in property investing and save up my deposit.
Yeah, right, right. And so you did that, and you bought your first property in 2021 in Geelong, through a buyer's agent. I think buyer's agents own the content airways, and therefore a lot of people, probably most people, consider at least at some point to use a buyer's agent. Why did you choose to work with one? And then after this, I'm going to ask you what your experience was, and then what the result was in terms of how that property's performed.
Yeah, yeah, great question. So I guess the main factor for me was time. Being a mortgage broker, as you can imagine, very fast paced, dealing with so many stakeholders. I just thought that I wanted to use a buyer's agent, get into the market quickly. And for me, it was like, I want to see that growth. I've seen these clients grow their portfolio over the last few years. I just want to get into the market. So for me, buyer's agent was the quickest pathway to that. Um, and so, yeah, I think that was in late 2021. And it was funny because that property that we ended up finalizing on, it wasn't the first property. They actually offered a property in Marsden, Queensland, one of those high set Queenslanders that I think has like a second story, and he had a pool out the back. And I was thinking, oh, pool maintenance, that doesn't sound great. Um, and Queensland doesn't have high insurance premiums, um, so I rejected that one. And funnily enough, that one's probably grown to a couple hundred grand in the meantime. And then the second one was a duplex in Caboolture. And my reservations about that was, well, sure, the rental yield's great, but isn't there a trade-off between rental yield and capital growth? You know, my brief to the buyer's agent was I wanted something that could grow quickly so I could scale the portfolio. So I wanted to see growth in, 6 or 12 months time. So yeah, I passed on the duplex, unfortunately, again, because that one's also gone up in value. Um, but yeah, the one we ended up settling in Geelong, um, that one had subdivision potential, solid block of land, and I was thinking high 400s for a three-bedder brick house. Like, what can go wrong? Uh, that one was rented for 280 a week at the time, and which 3% yield. I thought that was pretty normal for a Melbourne suburb. Um, and when rates were 3% yield seems all right, rent's covering the repayments. But let's just say a couple years down the track when rates have gone up, yeah, it's not too fun with that yield, even with the rent increases. So yeah.
Right, right. And talk to me about the process, and I'm asking these questions not to kind of put down the buyer's agent or anything, but just as a learning exercise, because I think people go into things thinking that a buyer's agent is this kind of mythical creature who will get me unicorns that I can't get myself, and then they will solve all my financial issues and I'll retire in 10 years. I just want to dispel that because I don't think that's true in any industry, not even just buyer's agents. Just you can't outsource your money decisions and expect to get the best return on investment possible because no one cares about your money as much as you do. But what was that process like? You credit to them, the Queensland properties have performed, but you turned them down. So what was that conversation like? If I'm Kevin, I'm going to that buyer's agent saying, I'm not sure about, Caboolture or this and that. Are they then coming back to you and saying, oh no, but here are the 30 data factors or 20 reasons why you should actually go for it? Or did they just fold and say, all right, well, if you don't want it, here's another one? Like, how did that look like?
Yeah, yeah, great question. I have to say that it was a pretty simple like rundown of the property and the suburb. It's like these are the key infrastructure projects. These are the goals for the property. Capital growth. This is why we think it'll grow. But there wasn't much reference to data factors. And now, having done your course, it just seems like a no-brainer. How could I have not seen that? Days on market, vendor discounting, all these things that you can see with real numbers that tells you whether a market's going to have short-term growth or not. Um, so I guess Yeah, they weren't too insistent on pushing any particular properties. It was more of a, "Hey, here's a property, let me know, soon," usually within the next 24 hours if you need it, if you wanna go for this one, because it's not gonna be on the market for long. No pressure, just let me know if you wanna proceed. So, I had my reservations and they're like, "Okay, no worries. We'll let you know when another one pops up." Um, so yeah, that was sort of the situation there. I felt like there was a bit of a disconnect between, I guess, the the brief in terms of what I wanted and the properties they presented me. And I think that a good buyer's agent, they should really take your brief into account. Whether it be you want a low maintenance or a brick home or, a three-bedroom or whatever it is, they should be able to factor those considerations in. And I think that some of the issues with the bigger buyers agents is you can have the strategy person, and then you can have the person that finds you the property. And sometimes there's a bit of miscommunication or something just doesn't flow through. Um, and so, to your point about no one cares about your money as much as you do, I tell that to my clients all the time. It's like you have to understand that you're going to be the person that is the captain of your own ship. And so while it's good to have an element of trust and you trust your broker, trust your accountant to give you the good advice, I feel like you also have to understand the rationale and the reasons for why they're giving you these recommendations and not just blindly follow. Uh,
Mm.
so yeah, definitely some learnings from that one.
Yeah, no, fair enough. And I think most buyers agents, including the big ones, they normally, as rationale to back up a property suggestion, get like a core logic PDF, which is rebranded in their own logo and colors. And it's got a whole bunch of like information in there, like proximity to the CBD and infrastructure projects, etc. But it's just like this static PDF, and it doesn't actually give you a deductive rationale or reasoning as to why this is the property that will do well or this is the suburb that will do well. And so I think that even if someone doesn't have time, like in your case, and they have to use a buyer's agent, and I've always said I think 5% of buyer's agents in the whole industry are probably okay. you know, Compare that to other industries and different sectors or different industries. Normally you've got that sort of 60-40 principle where 60% of folks are pretty good, 40% not so good. I think in the buyer's agent industry, it's more like 5% are good, 95% not good because it's not regulated. There's really no significant licensing required. But even if you do use a buyer's agent, you should be educated yourself. Like, had you at that time, through various sources, whether through your own research or whether a course like mine, if you were, uh, if you had assimilated the right data techniques and strategies, you could have immediately pounced on the Queensland one, or you could have said, "Okay, well, why are you presenting me with Geelong? Like, because this is going to be a dud market." And remember, we're talking 2021, so basically everything was doing really well in the COVID boom, so it kind of speaks a lot about it. But I think this is a really good share because we're not putting down any buyer's agents, but we're kind of just exposing the reality of how it works so people can make the right steps accordingly. All right, so then kind of fast forward, why did you decide to do my course, and what was your experience then buying yourself? Because you're a mortgage broker. I'm sure you don't have like 50 hours a week where you're just twiddling your thumbs, having nothing to do. So you're a pretty busy person. So, like, why did you do my course? And because time was a key consideration for you, how did you actually end up buying these properties?
Yeah, that's a really good question. I guess I'll start off with why I did your course. I think I've been following your content for, many, many years now, and I really connected with, a lot of the things you had to say. Um, so for me, it was a bit of a no-brainer. When I saw how much your course cost, which whilst it seemed expensive, I know buyer's agents at the time cost, double of what that is. And, buyer's agents now probably cost 15 or 20K. So I thought instead of, you know, paying a buyer's agent for each property, why don't I just, teach myself how to fish? Then I never have to, get given a fish again. So that was the rationale. I did actually got your course. I'm pretty sure it's back in December 2021 if you check the purchase date, which is actually the same time I bought the Geelong property. And so yeah, the timing is just, I don't know, a bit funny at the same time. But, I was like, "Okay, I'm gonna get in quickly with this buyer's agent. In the meantime, I'm gonna study up this course, educate myself, and hopefully I can do it for the second and third one." Um, of course, life happens, and I don't think I ended up, really engaging with the course until the end of 2023, I wanna say. Um During that time as a broker, I run valuations on my current property, the apartment we're living in, and also the Geelong one. And I was just hoping for for a good val. And so, yeah, that's one of the tips I guess I can mention as a mortgage broker is that you want to regularly check on what your valuations are on your properties. And there's also an exercise that we sometimes used to do called val shopping, where valuation's obviously subjective. You get opinions from one bank, might not be the same with another. So you can check valuations with a few different banks and see who gives you the best figure. I will mention that it's not so recommended nowadays because banks are starting to crack down on that. Uh, Valuations are a cost to the bank, so we can't just run valuations willy nilly. Um, but yeah, I digress. So we got a good valuation at the end of 2023, managed to pull some equity from our Geelong property. I will mention that the valuation was higher than what I think the property was worth. So that is another point. You have to be careful about not overcapitalizing because if your loan's higher than your property value, that's probably not a good sign. Um, I went into the situation knowing that risk because I wanted the equity, wanted the cash, and I was confident that property was going to be a long-term hold anyway for me. So we managed to pull out equity. We had some decent savings, and that's when I started engaging with the course. And I picked out Mackay as a market, and this was I think early 2024 when the Mackay market was really just starting to pick up steam. So it was getting hot, quite hot back then. Um, and I was looking around Slades Point, Andergrove, Mount Pleasant, all which were showing the right data points. And I was thinking, this is looking really promising. I really want to get into this market. And so one of the first ones that I looked at was, I still remember the address. It's like 4 Nice Avenue, um, Mount Pleasant. And it was a little bit rundown, three better. Um, and it had no price on it. And I was thinking, well, I can't, it looks like it needs a bit of work. So I wasn't sure how much it was worth. I talked with the agent. She did a walkthrough video and showed me the condition of the property and thought, geez, there's going to be some money invested to make this one work. And so given this was my first time stepping out and buying a property myself, I was a little bit unsure at the time whether I wanted to commit to such a big renovation. I had run some quotes past, a few building friends, and they said that, a normal bathroom, kitchen reno um, for that sort of property could easily cost you 50, 60 grand. And it adds up real quick. So I thought that was a bit out of my comfort zone. Um, Looking back, that property went for the low 400s, and post reno, it'd probably be worth in excess of 6, maybe 7 now.
Wow.
Um, so yeah, it's gone crazy, the Mackay market. Um, but yeah, needless to say, I think the Mackay market was super hard to buy in. I put in lots of offers. There was this one online auction where the property was going offers above 600, and I tapped out 640 as per my CMA, and the offers kept going 650, 655, 660. Property ended up selling around the high 600s, and I was thinking, geez, am I priced out of this market? It's just so competitive. And so I think from that online auction, I was a little bit discouraged. So I started looking further afield, and um, and in your course, you teach something about the ripple effect, where if you have a cluster of suburbs showing strong data, um, sometimes if the markets are too hot that you're buying in, you can look to the next door suburb. You know, Sometimes the data stacks up there as well. So I ended up going further afield to a suburb called Marion. That is a little bit further afield than Mackay, than I would have expected, but the market there was a lot cooler. You know, I could interact with the agents. They weren't getting 30, 40 offers, um, you know, on a single property. And so we ended up securing a deal in the low 600s. Um, I do feel that I had carried over some of my Mackay mentality over to Marion. I was like, geez, I really want to get this property. I want to make a strong offer. I don't want to get outbid. So I didn't negotiate as much as I think I could have. Um, but in saying that, I think the property will still do well long term. The data metrics are trending well, and it's got, you know, really strong rental demand. So, um, yeah, I guess my learning from that is I would say you have to be very patient with property and persistent. It's very easy to be discouraged, um, especially in these hot markets, and you just have to keep trying. It is ultimately a numbers game. Ultimately, you know, you'll find the one that fits your brief, or if it doesn't, you look further afield to cooler markets, and you can negotiate and find better properties that way.
Mm.
So that was the Marion property. Um, the most recent one that we purchased was in North Melbourne, and that one was actually on an auction. So a little bit dicey. I had inquired with the agent on the property, and you know, he told me that the auction was happening on that day. I didn't actually attend the auction. I just expressed interest on the property, and he called me after the auction, and he told me the auction's passed in. Are you still interested in making an offer on this one? And so I had a quick look at the comparables. It was in the low 500s. And I thought, okay, why not? You know, it looks like the property, um, you know, ticks a lot of boxes. So I ended up putting an offer in and secured it. So I didn't really intend on buying that one, but it just sort of happened. Um, that property ended up needing a fair few renovations, a little bit more than I anticipated. But I guess the upside is that the yield's quite solid. I think it's 5.5% on purchase price, not factoring in the renovations I put in. So we just count that as a sunk cost. Um, and so I actually didn't mention this before the call, but I've actually purchased another two properties um, in the meantime since then, not for myself, but for my parents.
Oh.
And so the other two properties, one is in the Frankston area and the other one is in West Wodonga. And so I actually carried forward a lot of those learnings to these subsequent property transactions, which were actually both off markets, and where I took the time, built the relationship with agents, and um, wasn't in a rush to try to secure a property. I just wanted to get a good deal, good value for my parents. And I think having that sort of detachment, not being my property, allowed me to be a little bit less emotional about it.
Mhm.
Um, so I think one of the things I utilized was the idea of having an anchoring point. And I feel like that's super useful in your negotiations because um, when you're making an offer on a property, and sometimes you put a timeline on it and you say, okay, my offer is going to be valid until close of business Thursday. Right? I feel like that puts kind of an artificial timeline on the agent, and you know they probably see hundreds of these templates every day. Um, Whereas if you have a real conversation with the agent and you say, hey, I'm really interested in your property. It's got a great floor plan. It ticks a lot of my boxes. But I've also got this other property that's similarly spec'd, but it's not as nice. I prefer your property, um, and I want to do a deal here. You know, what can we make work? And so when you say that you've got this other property that you're considering, you can create this impression of value. You know, I'm willing to pay this price for it. Let me know what your thoughts are. Otherwise, I want to go for this other property. It creates this, you know, the agents uh, incentivized to make a decision quickly, or the vendor has to make a decision, um, and they don't have that sort of the sort of pressure of if they don't make a decision, then they're going to lose you're going to go for the other property. They're going to lose you as a buyer. So you're still presenting that you're a serious buyer,
Mm.
that you're committed to the transaction, um, but you're not, you know, forcing the agent into make any decisions.
Right, right. Those are some really Great learnings, actually. I think people can put them in their pocket and use them on the next deal. I think so. You bought two properties for yourself post course and two for your parents. How? I mean, kind of aside from the financial side of things, how does that feel? I mean, you know, yeah. I won't ask a leading question. I was going to add more to it, but how does that feel buying for your parents?
Yeah, I appreciate that. I think when you ask a lot of questions, I'm thinking, oh, geez, I need to answer them sequentially. But look, honestly, it feels amazing. Both those properties have recently been rented out, and the West Wodonga one, it's actually really picking up, and the rental was higher than the rental appraisal. And so, I didn't even realize what a good deal it was, because at the time I was a bit unsure, are we overpaying for this one? And I think there's always that little bit of uncertainty in your mind. And even though you've got the data in front of you, you're still not quite sure. Um, so it's quite validating to know that you can trust the data, and that if you've done your research properly, um, that you can make the decision to purchase the property, and mitigating all those risks. So I think it's been amazing, and my parents are, I think that they're happy. They've expressed that they're pleased with the purchase. And funnily enough, they keep comparing the agents between the Wodonga and the one in Frankston, and they're thinking, "Oh, this agent got back to me really quickly. The other agent, there's been an open home, and I haven't heard back within 24 hours." I'm like, "Dad, just give it some time. I'm sure they're busy. They'll get back to you." And funnily enough, they did within the next
Yeah.
days. Anyway,
It's really cool. Yeah, I mean, the reason I asked that question is I'm sure it's a really rewarding feeling to help your folks out like that. I mean, if you were not educated, then I don't know that they may have never bought it, or yeah, I don't know what would have happened. So it's really cool that you've been able to do that. I do want to talk about borrowing capacity and some finance tips, given you are a broker, but I also want to just step back for a second and allow you to kind of share your thoughts. I mean, you've helped so many clients in a mortgage broking capacity, but what are your thoughts on like how much should people focus on their property investing, and how have you seen that actually translate into real happiness? I mean, I'm sure you have clients that have large portfolios, maybe much larger than even yours, maybe even mine, right? Um, I want to give you an opportunity to share what I think you're quite passionate about, which I am too, which is not equating financial abundance with true happiness. I call it financial happiness. I think being rich, quote unquote, is great. I think it gives you a lot of financial happiness, but not to be confused with like overall happiness. What are your thoughts on that?
yeah, that's a really interesting one, and it's something that I've thought over and over again over the past, few years. It's that, what am I trying to achieve here? You know, do I really want 100K passive income? Is that going to make me any happier? What would I do differently if I had all this money? And honestly, the answer is there isn't much I would do differently. Um, I guess I am privileged in the sense that I'm doing a job that I enjoy doing, helping people achieve their property dreams. But it would just be doing more of the hobbies, you know, doing the things I like, climbing, taekwondo, having a coffee out with friends. And so as long as I had meet that base, I can afford to do that. That's what's meaningful to me. So when I talk to my clients about, what are your goals? A lot of them say 100K, 150K passive income. I'm like, okay, great. That's a number, but what does that really mean to you? Tell me, where do you see yourself in 10 years? Right? I really want to try to unpack what their long-term goal is, what their vision is for themselves. And if they don't know what it is, well, try to clarify that. Is it spending more time with family and friends? Is it, doing part-time hours? Is it spending more time volunteering? Right? I think people need to be more clear on what is meaningful to them, because money makes you satisfies your needs and to a certain extent, but it doesn't bring you fulfillment in the sense that people think it does. So I think it's really important to take a step back, and whilst investing and building your wealth and saving for retirement is important, you got to think about also what matters right now, and enjoy the process, enjoy the little things in life, and don't get so caught up in, a bit of a rat race, so to speak.
Yeah, no, well said. I think success, in one way to define success at least, is, getting everything that you need. Because if you define success as getting everything that you want, wants are unlimited. You may think that your wants are finite, but when you get to a certain point, then your wants also expand. Trust me, I've been there. And it ends up being like a hamster wheel. And it's like, hang on, why am I not happy? I would have killed for the position that I'm in, like, 10 years ago. But it's like your wants also expand. So I think success cannot be defined by wants as a common denominator. So it's a really good point that you shared. And let's say someone's starting their investment journey, or let's say they've got a couple or a few under their belt, like you. From a lending perspective, what are some tips that you can share with folks that maybe helps them get into their next investment property? Or even if it's not about expanding borrowing capacity, how can they do things right from a lending game? Because as they often say, property investing is a game of finance. And if you can manipulate that game correctly, then the not number of properties, but the value of your properties, the outcome that you're trying to achieve can be accelerated. So, in the game of finance, what should people know?
Yeah, that's an interesting one. Look, I don't want to touch too much on the borrowing capacity hacks because I feel like that, that's beaten so often. Um, but I'll give some general guiding principles that I see a lot of. And one is I think you need to ask better questions. Clients need to ask better questions. A lot of the time I get, how much can I borrow? And I'm thinking, well, do you want to borrow for an investment? Do you want to borrow to live in? Is it for a second or third in property? And it sort of ties back to my point around, what are we trying to do here? What are we trying to achieve? Is there a lifestyle? Is there a 3, 5, 10-year plan down the track? So I think one of the things you really want to focus on is that when you're speaking to your mortgage broker, you need to get them on board with your long-term goals. Explain to them what you're trying to achieve. It's not as simple as, what's the best rate you can get me? Or what's my max borrowing capacity? Like, I don't want to say I hate, but I do hate these questions. It kind of drives me nuts. I don't blame clients because sometimes they don't know any better. And it's our job as a broker to sort of unpack these questions. But I feel like the more context you can give around what you're trying to achieve, the more the broker can structure it and strategize and help you plan to get to that goal.
Yeah, I
Uh,
think that's a really great answer. And so, if I was asking you then, like, Kevin, I genuinely don't know the answer to this question. What's your current portfolio value? And based on your vision 10 years down the line, based on where you want to be in life, what is your aspirational portfolio value in 10 years time?
Honestly, I don't have a number. But in terms of the aspiration, current portfolio value, I've got to add them up now. I'd say maybe circa 2 mil. But honestly, I don't even think about that. It's like, it's not something I'm trying to, um, get to 3, get to 4, get to 5. Like, it's just a number to me, right? Property is just a vehicle. It's an end to achieve a goal. And for my goal, it's to um, create a lifestyle that I want and a lifestyle for my partner. And so one of the things that I plan with my partner is that, we'd love for her to be able to bring her hours down. She works in OC rehab, which is quite a stressful role working with kids that are on the spectrum. And, whilst it's rewarding, it's also really draining emotionally,
Hmm.
even physically. Sometimes she tells me that she comes home and there's like splatters all over her shirt and, the kids dribbled all on her shirt. So I really want to be able to put more time back into her day. And, I'm thankful that I'm in a position where I can, you know, build my investments and build our wealth to sort of enable her to do that. And she has goals and dreams of her own that she wants to um, aspire to as well, namely spending more time cooking, baking. She wants to have a little plant garden, a little backyard. have dogs in the backyard. And, we can't do that right now with our one-bedroom apartments. So as long as I'm able to achieve that through property, whatever the number is, that's sort of our goal. And I think taking it step at a time is important. I think people can sometimes get caught up in planning really big picture in terms of what's my second, what's my third, what's my fourth
Mm.
property, right? I want to buy one property every 2 years. Sometimes I try to dial it back and think, okay, what do we do first, right? Your circumstances can change. We can adapt, but the important thing is that we're keeping that regular line of communication. And this sort of ties back into the relationship I think people should try to develop with their broker. You know, there's transactional brokers that just get you a loan, but I think a beautiful relationship with a broker and client is one where you can tell them your goals, tell them your dreams. They're almost like a friend, a confidant. And, sure, they know your finances, but they're there on the journey to get you to achieve your goals. And, that's a beautiful thing that I get to do every day, which really grateful for. But I think the more the broker can understand about those goals and dreams, you know, they're gonna want to work on your behalf, right? They're motivated. They're thinking, oh, I've got this client, like, I understand what they're trying to do. I empathize with that journey. I want to get them there as well. So
Wow.
people should try to seek to find those long-term relationships with the broker that they trust. And look, I'll be honest, like, I don't get along with everyone. There are some clients that don't mesh well with me. Maybe they're, I don't know, really interested in the footy. I don't watch the footy. So, you're not going to mesh well with everyone. But, you try to find a broker that you just get along with. And I think I tell that to a lot of clients, like, find people that you connect with. You want to surround yourself with the people that, lift you up and that you form relationships with. And, that ties back to the point about happiness. It'll bring you more fulfillment when you have these strong bonds.
Amazing, amazing. I love your answers. They're very wholesome. It kind of portrays how not all property investors are like these money hungry pit bulls trying to go for a 20 portfolio, property portfolio kind of setup. You're very wholesome. Your goals are very balanced and purpose driven, mission led. All about family and allowing property with all the leverage it affords to be a vehicle to get you to those, that more life outcome as opposed to a money centric outcome. So I think that kind of mindset will serve you actually really well in the long term and of course your clients. Before we finish, was there anything that you'd like to say or maybe a question that I should have asked you that I didn't?
Yeah. I think, I want to stress it that people should try to find their why, their drive to, whether it's the reason that they're property investing or the things that bring them happiness and, meaning in life. And, that should revolve around relationships with people, your hobbies, your activities. So I think that that's so important. And if you can tie that into property investment, sometimes people love, buying properties. Maybe that's your happiness. Um, so I really want to stress that point. And I guess the last thing I want to leave on is that for those that want to really scale a portfolio and, build 10 properties and maybe they're, on 100K income, right? It's going to take hustle. You need to step outside your comfort zone, whether it's doing a part-time job, starting a business, asking for that pay rise, right? If you really want to get there with property investment, it's going to take guts. It's going to take drive and ambition. And, you know, I've got this one client who, he's a teacher on, less than 100K income and somehow has got to 4 properties. And, I tell him, this is your borrowing capacity. And, this is what we can do for your next one. Like, I don't want to discourage him, but he couldn't borrow much. And then he comes back to me and says, okay, what income do I need? What if I earned an extra 50K from doing this part-time job? And I'm thinking, goodness, okay, if you can do that, sure, go for it. But you've got to hold your job for at least 12 months. And it's like, no problem, I can do that. And guess what? He came back to me, earned that 50K income. I was able to use it and he could buy his next property. And so I respect that sort of hustle. And when I can see that sort of driving clients, I really want to help them because I can see that he's got a goal that he's working towards and I want to help him achieve that.
No, it's
Yeah.
so inspiring to hear that actually. It just tells me how much people sacrifice. I mean, he's not just getting on the property ladder, but just how much conviction he has in property as an investment vehicle because he'd make a lot of sacrifices lifestyle wise to get that second job just to be able to get one more property. But it's like in 15 years' time, 20 years' time, that one more property is going to make him another, I don't know, I'm just making this up, 1 million, 1.5 million plus equity, and it's like, that is life-changing based on the hustle he did now. So that's really cool. Um, Kevin, we'll wrap it up here. Thank you so much. I'm really grateful to have, members in my course who are, I have all sorts of different people in my course, but I'm really happy to have folks like you in my course that are just, yeah, just genuine, straight up good human beings from what I can tell. Um, Everyone who's watching or listening, Kevin's company is called MLS Finance. You can Google it or something like that. I'll also put his name in the description. Um, and Kevin, anything last you want to say other than, well, I just want to say congratulations.
Uh, I want to say thank you. You know, spreading good energy, good vibes, and I feel like that's what you do a lot of, and you've built a community of investors that can support each other and lift each other off, and I think that's amazing. Yeah.
Thanks, Kevin, and thank you, everyone. Hit the subscribe button, give it a like. Also, I want to say there's like more than 200 of these client interviews on the client results playlist on YouTube. I honestly don't mind if you do my course or not, but the most important thing is go and watch or listen to those episodes with amazing people like Kevin, because they'll serve to inspire you and also educate you. And that is, I think, what you need. It allows you to take that very next step in your investment journey, whatever that maybe. Thank you for being with me. And once again, thank you so much, Kevin.
Thanks, TK.